Good morning. Welcome to Bazaar Morning Call. I'm Lata, and in a bit, of course, Anuj and Sonia will be with me. Well, actually, it's a little confusing. The global markets are screaming about the slowdown. They're worrying about the slowdown. You can see the dash of red on NASDAQ, Wall Street indices. You can see it on EU indices, and you can see it, mixed in early morning Asian indices. The big factor that we've all been talking about is the fall in US yields, and now the 10-year yield has fallen to 2.37 actually yesterday in intraday trade, which is the lowest that we have seen in since 2017. Usually yields are falling because you don't expect too many people to borrow in the future, and you don't expect too many people to borrow in the future because you expect the economy not to do well. You can call it slowdown, you can call it recession, but basically there will be very poor economic activity, which is why the 10-year yield is falling, indicating such huge fears of slowdown. But India is faced with a contradiction. Usually lower yields help us because they also mean lower crude prices. A global slowdown, we are outperformers during a global slowdown. As well, we have this big positive of huge amounts of money coming every day into India, and even as recently as yesterday, when the markets didn't do all that well, saw a fall, you did see 1,500 crores. So I'm really confused. Will the Indian markets continue to surge up on this liquidity gush, or will it worry, every now and then at this global slowdown cues? It's quite a battle out there.
Yeah, it is quite a battle. Lata, hi, morning. Anuj, morning. But one thing is for sure, that this market is still in the grip of the bulls. Oh, I mean, both FIs and DIs bought in the cash market yesterday. FIs bought about 1,500 crores. Domestic institutions bought about 135 crores. And we have so many stocks hitting new highs every day, whether it's names like Axis Bank, Bajaj Finance, Titan, Bata, etc. So yes, this market is firmly in the grip of the bulls. The only thing is that 11,500 mark yesterday proved to be a bit of a hurdle for the market. And the Bank Nifty also closed off its high. So let's see which way things go. Anuj, morning. Do you get a sense that this 11,500 level could prove to be a bit of a resistance for now? Or is it just a matter of time before it gets taken out?
Morning, Sonia. Look, the evidence is that 11,000, not 500 perhaps, 11,550, 560 thereabout is proving to be the resistance. If you see this month, there's been 4 times that the Nifty is going to 11,550. March 19, high was 11,544, we closed at 11,532, 20th March 11,556, closed at 11,521. March 22, which is when the market sort of reversed and had this top, at least for this series, went to 11,572 and we closed at 11,457. Yesterday's high was 11,546 and close was 11,445. So that's documented now, but that's just irritant. That's nothing. This is a market which will go to at least 12,000, perhaps even higher before the election outcome. The way to play this market is on days like yesterday and today to buy next month's options, because next week's options. Today's expiry, so a lot of options will lose premium. That normally is the case. So the way to build positions is, if the market gives you decline, to buy next week's calls. What that would do is, also next week on Friday we have the RBI monetary policy. Trust me, before that, till Thursday, the market will factor in a 25 or 50 basis point rate cut. So the way to play this market is before the policy, not today because it's expiry, so there's likely to be some volatility, is to build position for next week. That's how this market has rewarded you. For today, 10,400, yesterday's low was, 11,400, yesterday's low was 11,413. That's the crucial mark. If that's supported, expect short covering. If that's broken, expect long unwinding. So both events are in place today. My base case is still that market takes support at 11,400 and moves on and sees short covering. The Bank Nifty remains strongest of the all indices, even though yesterday it fell, but it recovered as well. So the data is also indicating, FI data, both in cash and futures, there was quite a bit of buying. Today's expiry, of course, and it's the monthly expiry, so things could heat up post 3 p.m. Normally what happens on expiry day is that you meander around a zone till 3 p.m. and then at 3 p.m. there's that magical move which happens. Let's see, that's the base case, but the better way to play is to buy next week's calls on decline. That's how you protect yourself from the expiry day volatility, and you get a clean play for the next week. This is a market which is really in a fresh bull phase, and you don't want to time it. You don't want to stand against it.
Okay, well, on that note, let's also get a quick take from a couple of other wise experts that we have this morning for you. First up, Paul Kitney of Daiwa Capital Markets says the negative outlook for the trade cycle has in part influenced our view towards gearing Asia-Pacific exposure towards domestic or regional demand, leading to a large overweight in Indian and selected ASEAN markets. Similarly, he remains underweight the heavy trade cycle exposed markets such as Japan, Korea and Taiwan.
Okay, so that's one equity view, but we're going to get plenty more. First, let me get some money market views out of the way. Mohan Shenoy of Kotak Mahindra Bank says expectation of additional rounds of auction of FX swaps by the RBI is likely to cap forward premium levels. He says this could result in intensified dollar selling by exporters and custodian banks, thereby supporting the rupee. He expects the USD-INR pair to trade in a range of 68.90, 69.20. Basically, people are expecting the currency to strengthen, partly because of flows and partly because of this FX swaps.
Okay, and he also talks about the bonds, says gilt yields have been range-bound, awaiting auction calendar for the first half of FY20. He says the strengthening rupee, stable crude prices and lower US Treasury yields are supporting the bond market. He expects the 10-year benchmark bond yield to trade in a range of 7.46 to 7.49% for the day.